Hello traders, it's me, and welcome back to the channel. In today's video, we'll be discussing how the Fed's interest rate decision will impact crypto and Forex. The Federal Reserve has just raised interest rates by 75 basis points, which is the largest single increase since 1994. This decision was widely expected by market participants, but it still sent shockwaves throughout the markets. So let's dive in and see what this means for you. As you know, the Fed's monetary policy decisions have a major impact on the price of Bitcoin and other cryptocurrencies, as well as currency exchange rates. In general, when the Fed raises interest rates, it makes borrowing more expensive and can slow down economic growth. This can lead to a decrease in demand for risky assets such as cryptocurrencies, which are often seen as a speculative investment. On the other hand, raising interest rates can strengthen the US dollar, making it more attractive for investors to hold dollars or dollar-related assets. However, the impact of interest rate decisions on crypto prices is not always straightforward and can vary depending on a number of factors, including the overall market sentiment and the specific cryptocurrency in question. For example, some cryptocurrencies such as Bitcoin are seen as a hedge against inflation. If the Fed raises interest rates in response to rising inflation, it could potentially drive demand for Bitcoin and other cryptocurrencies that are seen as a store of value. On the other hand, interest rate increases can also lead to a decrease in liquidity in the market, which can result in lower prices for crypto. This is because when interest rates rise, investors may choose to hold on to their cash rather than investing it in riskier assets. As a result, there may be less trading activity and lower prices in the cryptocurrency market. In addition, the cryptocurrency market is also highly influenced by global economic conditions. If the Fed raises interest rates, while other central banks keep their rates low, it could potentially lead to a sell-off in the crypto market as investors move their money to higher-yielding assets in other currencies. It is important to note that the impact of interest rate decisions on crypto prices is just one of many factors that can influence prices. Other factors such as regulation, technological developments, and market sentiment can also play a major role. Therefore, it's important not to make investment decisions based solely on interest rate predictions. When it comes to Forex trading, the impact of the Fed's interest rate decision is usually more straightforward. Generally, when the Fed raises interest rates, the value of the US dollar increases. This is because higher interest rates make the dollar more attractive to investors looking for a higher return on their money. As a result, the price of the US dollar tends to rise against other currencies. For example, if the Fed raises interest rates while the European Central Bank keeps its rates low, the value of the euro, which is the currency of the Eurozone, may decrease relative to the US dollar. This is because investors may choose to sell euros and buy dollars, driving up the price of the dollar and lowering the value of the euro. However, it's important to remember that currency exchange rates are influenced by a wide range of factors, including economic growth, political stability, and market sentiment. So the impact of the Fed's interest rate decision on a particular currency pair may vary depending on the specific circumstances. If you want to learn more about how the Fed's monetary policy decisions affect the markets, I recommend checking out the resources provided below. It is important to stay informed and educated as a trader, so that you can make the best possible decisions in the markets. Don't forget to follow us for more updates. See you next time.